All right, I'll kick us off here. Good morning, everyone. Excited to be, I guess, moderating a panel today about quantum-resistant sidechains, which I think is a natural progression given that we just talked about roll-ups in the previous talk. I'll kick us off with just a very, very quick sidechain introduction for people that don't know, and then would love to dig deeper into the space of solutions for how sidechains and post-quantum resistance in Bitcoin intersect. So the Blockstream released the sidechain paper in 2014. Initially, that was the Liquid network. It is the Liquid network. This is a design of another chain, right, that is pegged to the Bitcoin blockchain. The initial model was a federated multi-sig sort of custody model. And one key property is that it has its own consensus mechanism. So this is distinctly not proof of work. There is its own consensus. The opcodes are basically cloned from Bitcoin Core, the Elements code base, but there are opcodes in the Liquid network that are not there. There are properties of sidechains that are not there in Bitcoin Core, like confidential transactions, that sort of stuff. So basically, scalability and privacy sort of blended solution. So that's a quick introduction to sidechains. I'll basically I guess, the first question we could start is in the QBTC solution. I don't think the audience is very familiar. Now that we just spoke a little bit about Liquid, what does your solution look like? What was your inspiration in thinking about sidechains as a potential avenue for post-quantum resistance on Bitcoin?
Yeah, so we've been looking at the quantum issue for a couple of years now, the leadership of our company. And one of the concerns was, as we've discussed this during this summit, is that there simply may not be enough time to achieve full consensus on mainnet prior to a quantum attack. So we thought about what can we do? What can we make happen in this time? What can we do without having to get consensus on mainnet? And the answer to that was a sidechain. So we built QBTC. It is a proof of work sidechain. It pretty much models Bitcoin's UTXO structure. It's very, very familiar. It's got Nakamoto-style consensus, merge mining. It's got a federated one-to-one peg. There's no extra token, nothing like that. The real purpose of it, though, is that there is an option to transact securely in the quantum era in the event that Bitcoin does not achieve consensus in time.
Got it. So maybe one interesting question, you had a lot there to unpack, is this also came up in the last panel, which is the bridging mechanism. If we don't have some sort of post-quantum verification on Bitcoin layer 1, how do you think about bridge security and the extent to which the script entering your sidechain is secure?
Yeah, so bridging is a very tough issue. We get that. We've been talking with Mike and the Anduro team about integrating with them and using their bridge. They've got some really, really interesting ways of handling it on mainnet.
Yeah, if I can elaborate. So let me introduce myself. So I'm Mike Casey. I'm Director of Engineering for Meritech, and I'm the Chief Architect of the Anduro platform. Anduro is not a sidechain. It is a sidechain platform. And it is much like Liquid sidechain. I refer to it as it's as if Liquid and Rootstock had a baby. Because it's actually a hybrid federation and merge mine chain with at minimum 80% of all revenues going to the miners. So it is not a cartel, much the same way I would view Liquid as, of people who just collect money. No, it's designed to send extra revenue to the miners and to give increased capabilities to Bitcoin that it cannot through the use of side chains, which are effectively other layer ones. So think parallel layer ones, not necessarily layer 2. So, and then the most important part is the bridge. Mara, as you may know, we are the world's largest single entity miner, and we can operate all of Anduro primary assets are one-to-one pegged with Bitcoin. There is no other asset. We're not doing fundraisers, no token raises, no crowd sales, no nothing. It's just Bitcoin, proxy Bitcoin with another asset. So, and the fees, as mentioned, by and large, go to the miners. So the point of this is to get the miners paid, get more fee revenue for miners so we can increase Bitcoin security budget. So the other thing about, we run our own pool. We are, I think at present, the 6th largest pool in Bitcoin. And what that means is, specifically from a quantum standpoint, we also run Slipstream. How many people here know what Slipstream is? Okay, that's good. So Slipstream, of course, famously, it's good for JPEGs and op returns, but it's also good for private transactions if you don't want to be sniped in a short-range attack. So we can actually affect a quantum-resistant bridge, provided, trust me, bro, the miner's not going to quantum attack you. You can just use Slipstream directly and peg it off onto the quantum-resistant sidechain. I don't want to take up too much time, but so we currently have 2 sidechains that are on testnet beta. Alice, which we hope to make quantum resistant, and we're actually implementing actively BIP360 into coordinate as it progresses. So we hope to go live by the end of the year on mainnet with coordinate and integrate as soon as it is ready BIP360 into it, along with a signet of BIP360 on the Bitcoin side that we may eventually turn into a full-fledged testnet. Sorry.
No, thank you. That was very helpful. No, it was very helpful in terms of unpacking some of those things. So I think the next thing I was actually going to get into, you actually already talked about, which is the consensus on the sidechain and how you think about consensus on the sidechain and different payoffs and incentives, basically, to the miners. So yeah, just curious as to how you guys think about if there was a point of quantum sidechain, why a certain consensus would be selected.
Yeah, we modeled it after Bitcoin. You know, Bitcoin's consensus model works. We've been talking with Mike and them about using merge mining. We want to continue to support the miners. You know, the amount of money that miners have into hardware and infrastructure is pretty significant, so we want to make sure we continue to support that and make sure that they have a viable path forward. Yeah.
And to me, that question is vital, right? Because if we do go with a roll-up centric solution, if you look at what's happened in Ethereum, which has been overtaken with roll-ups, none of that goes back to supporting the security budget of the L1. It is all distributed out, and they're floundering because of it. They've completely kind of destroyed themselves with a couple of the decisions they've made recently because they can't sustain the L1. And if we do not provide a security budget and everything moves off onto these roll-ups, then the miners will start for thieves and things get ugly.
Would you guys be able to provide just a very quick overview of merge mining for the audience that may not know what merge mining is?
Sure. Merge mining is the other aspect. People who don't know what sidechains, because they've fallen out of favor, they're a very old concept. Merge mining is even rarer to find people who actually understand merge mining. But it was proposed by Satoshi. He actually proposed merge mining for something called BitDNS, which eventually became Namecoin. But in his explanation of it is probably the best one I've ever heard. It's the most succinct. So you take a Bitcoin block, right? But that block has an extension on it that has proof data for another block. So this block is considered valid for both chains. But because of so the other chain uses Bitcoin valid as its consensus mechanism as well. It's valid for Bitcoin, it's valid for my chain. But it can do so at a lower difficulty. So you can actually have a subset of the miners mine these blocks, merge mining, and collect fees on the sidechain even when they don't win a Bitcoin block. So it allows miners to reuse otherwise wasted hashes, right, and actually get profit from them. Of course, this is paid out in the sidechain asset. And the other component is if you have a link one-to-one, then that asset is also redeemable and, in fact, is proxy Bitcoin. It's actual Bitcoin that you're still mining, not Namecoin or something else. So if you add all that together, so Satoshi's actually, if you break the branch, so if you break the branch off and submit the Bitcoin section with the proof, most people think it's about anchoring, and anchoring is not what merge mining does. It is a side effect. You are including something in there, but it's actually the fact that you're using Bitcoin's proof of work for a valid sidechain block that makes it valid, not the anchor. So it's not about anchoring and using Bitcoin security. That's not what it is at all. So that's a high overview of merge mining. Happy to take any questions after.
Awesome. Do you have anything to add on that?
Nope.
Okay. Okay, got it. So in terms of the anticipated flow or use case, right, and in terms, you're saying that you want to give people an option to secure their Bitcoin independent of what happens in Bitcoin layer 1, basically protocol discussions, right, whether it's BIP360, commit, reveal, right, Hourglass, all of these things are on the Bitcoin core, kind of layer 1 landscape. Inherently, in these solutions that you're describing, the Bitcoin that's on these side chains is pegged one-to-one to Bitcoin, correct?
Yep.
So in terms of the game theory, right, where you have, let's say, a quantum hack to the Bitcoin layer 1 before any upgrades actually happen, right, and the price of Bitcoin drops because of that, right? Or the price of Bitcoin is subject to market forces with Satoshi moving coins, or something goes on, right? It is true that the QBTC that's on these sidechains would basically also fall, right? So how do you think about those trade-offs? So curious, this is just, one thing I was thinking about when it comes to the game theory of what you're protecting against on this sidechain.
That's a tough question to answer. We hope to secure the value as best as possible, but really it's going to depend on how the attack looks like, what happens. The bottom line is we don't really know. We want to obviously keep everything as good as it can be. The one thing we've done is we know that it's really tough to get a lot of people to bridge over. One of the big problems that the L2s and the side chains have had up to this point is getting TVL. Nobody uses them. We've seen that happen over and over and over. We've talked to a lot of institutions and stakeholders in the industry about QBTC, and they really like the idea of it, but they say, we can't move our clients' funds over. We can't bridge our ETF over. We can't bridge our funds in custody over. So what we're doing is we're doing something kind of similar to the commit reveal or a pre-commit, where you can sign a message on QBTC with your ECDSA keys prior to Q-Day that ties your ECDSA keys to a post-quantum key. That way, before Q-Day hits, we have a kind of proven record, a proven history of who the rightful owner is of those coins. Then after Q-Day hits, that still allows for a way for people to move their coins over in a secure manner, knowing that those coins were not stolen.
Got it. So that's under the assumption that the quantum hacker did not already steal those coins, right?
Yeah.
So you'd have to basically commit, and then when Q-Day has happened, you basically have your chance to go to your sidechain, and then the verification happens that those were you were the rightful owner of those coins.
Yep.
Got it. Do you have anything to add on that?
Well, we just had a panel discussion on that very subject, but I think there's two major subjects in quantum. One is the wider scale, what do you do with vulnerable coins? The other one is, how do we actually activate a quantum resistant scheme? Because remember, it's been at this point, 7 years since Taproot? Do we even know how to do that anymore? I don't know. So to garner support and to try to get a viable version that we know, what we can do is we can activate it, yes, of course, through a signet route, but we've activated a bunch of different signets now with a bunch of different proposals, and none of them are making it anywhere near to consensus. But specifically, if we activate a sidechain that has an active instance of BIP 360 that you can use with real Bitcoin, well, then people can get comfortable testing it and making sure, yes, this actually works, this actually fits my needs, and then we can help garner consensus to implement it on Bitcoin for real.
Got it. No, thank you. That was helpful. So we talked about these scenarios in which you're bridging to the sidechain, and the point is that you're not really sure what happens on kind of regular Bitcoin or the L1, right? In a scenario where we go through with one of these paths, BIP 360, commit reveal, basically Hourglass, one or more of these things, what do you see the value of quantum sidechain in that case? Like in a world where Bitcoin migrates, do you still see value in that? How do you think about it?
I saw value in it. Personally, I saw value in it long before we implemented the quantum stuff, because there's a number of other features in Coordinate that actually make it much more easier for payments than Bitcoin, because you can actually utilize the Federation consensus to make things faster and easier and cheaper. And also some other features that, I implemented a very interesting scheme for reverse auctions for fees. These are things that would help make it a payment, and some of these might leak back into Bitcoin one day, but there's value to sidechains other than just quantum. That's why Anduro is a multi-tenant sidechain. It's to have sidechains for use cases, and all of them pay back the miners.
Yeah, just like Mike was saying, that even if the primary purpose of this doesn't end up being quantum, protection against mainnet, there's so much we can do. There's the ability to rapidly deploy really cool features, DeFi stable coins, Bitcoin backed stable coin, kind of like DAI on Ethereum. There's a lot of things you can do and rapidly prototype, deploy, and get out in the real world that users want to use. and it brings the fees back to the miners. They can do it in a quantum safe manner. So there's a lot of ways that we can use these side chains other than just protecting the value of Bitcoin.
And anything that's transacted on it does generate for the Bitcoin security budget. So that's helpful.
Got it. So I think one thing that, one last thing on my end before we either leave it to the audience or you guys can basically say, closing thoughts or comments here, is just to give us a timeline of where you are with, what you're building, what to expect in the next 12, 24 months as a quick snapshot of just where the products and infrastructure stand here.
So as for us,
Yeah.
we are building out the network actively. We anticipate a mainnet launch of Coordinate with or without BIP360, depending on the state, by the end of the year. BIP360, how are we coming on that, Hunter?
Oh, we are trucking along, buddy.
Yeah. So yes, so we anticipate a launch of BIP360 somewhere around that time frame. Hard at work there, and so the Coordinate and also the Alice network is going to follow on shortly thereafter, and that's the EVM variant. Yeah.
We have our DevNet live right now. We've got a mobile wallet demo as well. If you all want to check it out, see me after the talk. I'll let you send some coins around. It's in production actively. We're looking at probably like a Q2 launch next year as well, so similar time frames. The code is open source on GitHub. Check it out. We made it live during the Vegas conference about a month ago. So check it out, collaborate with us, tear it apart, have fun.
And we currently have deployed a testnet version of both Coordinate and Alice. Feel free to check them out. We will be integrating BIP360 as soon as it becomes available. Also, we'll have a BIP360 SIGNet up, so you can check it with an actual Bitcoin client.
Awesome. Well, that's enough for my questions. Yeah, we'd love to open it to the audience if we have time.
Does anybody have any questions?